Hey traders, this is Ron. Happy Halloween. Hope you guys had a fantastic day. As always, everything in this presentation is for educational purposes only. We'll kick off here with the Dow, day after Fed day, right? Let's see, the market's jumping higher or lower? No. The Dow is down a whopping, 0.5% or so today. We continue to have higher lows. The highs maybe ever so slightly lower. Basically, it's a triangle formation, pennant formation, but we're above all moving averages. Therefore, the bulls get the edge technically. And that's one of the reasons why you don't get caught up listening to all these talking heads on TV, in my opinion, and elsewhere. Oh my God, if the Fed does this or doesn't do that, it's really about what does the big money want to do? Are they selling or are they buying? Because the average retail trader or you think about the average person watching CNBC, they don't have the capital to really sway the markets. So while it's sort of like they say one thing, but what are they really doing? It's like, oh, this is good or bad. Yeah, well, are the big money buying or selling? We can see they really weren't selling at all, were they? So bulls still have the edge on the daily charts. If we go to, actually, let's do the SPY real quick. The SPY was down just over 0.25%, but still sitting up there at near all-time highs. You take a look at the Qs. It's the day after with Apple earnings. Qs were up just a couple pennies. They're sitting there practically at new all-time highs. And then if you look at the VIX, $VIX.X, it did pop today 7%. If I zoom out and we look at a multi-year view of the VIX, don't get caught up by this is the level we always bounce from in the VIX, which immediately means if the VIX is rising, the S&P is selling off, because sometimes we can stay for a better part or close to a year, be bopping above and below 10. Well, right now we've been, hanging around 12, 13 as reversal points, but then sometimes it'll stay there for months. You might get a quick drop or a pop, but look at that, July into October, nothing. Here there was a month of nothing. Here there was a month of nothing. Now we're finally getting it down there. It could be a month or two before anything happens. We just don't know. So how I view the VIX is if it's below its moving averages, that's bullish for equities. Is it a red flag that the VIX is down at 13? No, I've just shown you proof that we can be months in that area and it's still bullish for equities. It just shows there's not a lot of hedging going on. There's not a lot of fear. If you listen to, again, the news media or, there's always a bias and they'll get you worried about everything. Fear sells. But for me, blocking out all that noise and keeping life simple, I would just go to the SPY and I'd say, hey, where are we? Are we above or below significant moving averages? The 20-day EMA is in red, the 50-day SMA is in orange. Hey, we're above both. Market's bullish till it isn't. If you listen to all the talking heads, they would have told you the world was ending the moment a new president was elected, or the moment a trade war happened, or the moment this, or the moment that, going back to even other presidents. Fear sells. One day they'll be right, and they'll all point to that one time they were right and say, see, told you so. Meanwhile, they haven't done anything during this incredible rally. All right, enough on that. Now let's talk about Apple. I don't know if that's a real tick or not, but we got down to the 20-day EMA in red today. That's down near 238, finished at 248. We're practically within pennies, about 30 cents of fresh new all-time highs. That's pretty impressive. How goes Apple? How goes the market right now, it seems? If Apple continues to move higher, it's going to be hard for the overall market to sell off. If the market starts selling off and Apple sells off, maybe then we can say, okay, maybe we got some selling pressure that might come in and we get a little bit of a correction. But the longer Apple holds up, it just keeps bringing the market with it, it seems. So Apple, yes, is bullish. If we close at new all-time highs, that's even more bullish. Now, Kraft Heinz had earnings, and look what they did. This is Kraft, 13%. Take that, Apple. If I zoom out, Kraft has definitely come off its highs. I mean, holy guacamole. You go back to Q1 of 2017, we're up at 90. We were just down near 25. Now we're at 32, just to show you how far it's fallen. If I do zoom in, look what today has done. We took out the previous high, and we're almost on the verge of taking out this other high too. Now, I would say this area here is a lot of overhead supply potentially, because there was a dip here, we came back up, then another sell-off, another attempted to sell off, but then reversed. And that was a sign, okay, I guess the bears aren't going to try to make new lows. Bulls were coming in, and now you get the earnings news. At this point, after a 13% move, where would be the potential trailing stop? I mean, if you use the intraday low, think about that. The intraday low was 28.50. That's a huge stop on a stock like this. It's over 10%. But that's where it would literally be put. Again, from an educational perspective, where else would you put it 50% retracement or something like that. So I would go with today's intraday low, and then as the stock moves higher over the next day or two, or even if it doesn't, simply over the next day or two trading. So today's Thursday, we have Friday, and then into Monday of next week. Once we can get an 8-day or a 5-day EMA closer to where the stock is trading and it can track it a little better, that could be a momentum type of end of day trailing stop. But right now the 20 days way down there, and it's just too big of a stop using standard methodology, if you will. So this one is bullish. I like where it's at. You could say, well, if we get over here, that's a little more bullish. Yes, I would agree. But today, that's a powerful move. Average volume looks like 7.4 million shares. We were at 38 million. So 5+ times the average volume. That's a big deal. How about ABMD? Check this one out. This is a biomed. Nice big pop. I like the little bit of inverted head and shoulders. This is also earnings related. Took out the previous highs here. Sort of like a hot knife through butter. The next target's going to be the gap down around 222. Just ballpark it. But at that point, I mean, that's still 10% higher, right? Almost 10%. Then it's a gap fill up to 280. Maybe 260, there's some overhead supply, but that's the area. This is looking very interesting. And it's a more expensive stock, but again, quite interesting. And how about TWLO? This was a big mover, lost 10%. Now on TWLO, it did not follow the 50-day very well, right? And we should be able to see that. Below it here, below it here, below it here. Never really stayed below it a whole lot. But even on something like this, you can just see how the sentiment is changing, because once we got below the moving averages, the rallies then couldn't even get over it. Isn't that funny? Fall, can't get over it, fall, run up into it, now we're gapping down. The target for TWLO at this stage, I would just try to connect as many dots as possible. Typically you're looking for 3 connecting points, but I mean, a one-day spike down, another day spike down, I would probably say somewhere at 65-ish is probably the bigger support level. I mean, maybe it can stop in here in the 70s, but that's a huge downside potential yet here in TWLO. So heads up on that one. Again, protective puts for earnings can save your bacon. So that is it. Wish you guys, again, happy Halloween. Have a great Friday, and I'll see you back here in the weekend video. Take good care, gang. All the best.